I am so glad that you're here with me to start diving into being the expert in a divorce. So, why would it be important to know what you can about being in a divorce sale? Uh, we're counting on you as a real estate professional to know all that you can to be able to serve these families in a really big way. So, we're going to dive into some facts and some statistics about divorce. We're going to discover some of the obstacles and sales sabotage when it comes to working with couples that are going through a divorce and establish some verbiage for some creative ways of getting in front of people who can refer you, such as family law attorneys, CPAs, and financial advisors, those that are going to know and be in the know when somebody is going through divorce and could give you a referral to be able to work and serve their people. All right, so let's dive in. All right, quickly, I want to share with you about buildanagent.com. This is my side business. I have taken 24 years of being in real estate and finance and put it into a really fun to use program. It is self-paced, it's video-led, there's worksheets and checklists, and it's designed for new or newer realtors. I've got a $47 a month program where it's got self-paced videos for sales mastery, working with buyers and sellers, financing basics, and of course, the really important skills of all is soft skills, negotiations, overcoming objections, communication, those kinds of things. If somebody's brand new, just got their license, and they have no support or no training from their broker, I've got an all-in-one 12-module training for $300. So making it super, super affordable because I don't want money to be the reason why somebody doesn't get the proper training that they need to have confidence and understand how to have a really great consultation and presentation with buyers and sellers. All right, so let's dive into our divorce education here this evening. We're going to talk about stats and facts, social media and divorce, and what impact social media has on divorce, and stats on gray and silver divorce. So, did you know that 1 in 3 divorces start online as affairs? That's it's very interesting. 25% of couples fight about Facebook or Instagram at least once a week. And 1 in 7 married people have contemplated divorce just because their partner spends way too much time on social media. Fun fact, Facebook is the #1 source for online divorce evidence. So somewhere around 81% of family law attorneys will go to Facebook for evidence for their client to be able to bring it in front of the judge to say, no, no, this is why the divorce is happening. And 14% of adults say that they look at their partner's social media accounts for infidelity. I was quite surprised by that. Here's a couple of other statistics that you should know and just the overall feel in case you do take on working with people going through a divorce. You've got to be prepared for potential high conflict. Not every divorce is high conflict, but some of them are very, very much contested. A lot of times the individuals inside of the couple, they have different motivations. So one might want to hurt the other one. One might want to win over the other one. A lot of times there's hurt emotions. One person wants the divorce, the other person may not want it. And so they might find ways to delay it or to try to keep it from happening altogether. And there's often painful decision-making requirements of them. And even though it's the largest financial decision of their life with buying and selling real estate, it's usually emotionally driven. So we need to focus on growing our skills with empathy and emotional intelligence. And understanding conflict resolution and skillful negotiation strategies is going to really help propel your success if you're going to be working in such a high conflict situation. The average household income drops 42% after a divorce. So that's something to keep in mind because sometimes somebody wants to stay in the home. We'll talk about that in a few minutes. And if that's the case, they often can't afford not only that mortgage payment, but the carrying costs of that house because of that significant income drop, with it being a one-person household. And here was something that was very interesting in case you want to know who your target market is. 2/3 of divorces are initiated by women. Florida is an equitable distribution state. That's important for you to know. So if you're not in Florida, you're in a different state. Every state has their own set of laws and rules, but Florida is an equitable distribution state. And I thought this was a really interesting fact to share. Those under 30 years old represent the largest age group of couples divorcing. So if you're thinking, oh, maybe I don't want to work with divorcees because I don't want to work with, older people while they're working through 40 years worth of divorce mess, you would be surprised to know, I was anyway, that the largest group was under the age of 30. So let's talk about gray and silver divorces. Those of the age group of 54 to 64, that divorce rate has quadrupled over the past 30 years. And 1 in 4 divorces involved couples over the age of 50. 2 out of the 3 gray divorces are initiated by women, so that's in line with the other age groups. But I found this stat to be very interesting. 59% of those over the age of 50 are providing financial assistance to an adult child or children. And those kids, they're adults. They're not even in school anymore. So they're adults. They should be on their own, but one of them is financially supporting them. And so this is often postponing retirement goals, what they've dreamed about for the last 20 or 30 years. And they're making major financial sacrifices and often experiencing stress in their marriages because of the continued financial support of that adult child or children. So I found that very, very interesting. So let's talk about the balancing act of divorce math. 65% of divorcees remarry, often within 3 years. Interesting. There's great opportunity there for you to serve them. And 50% of those in a divorce do not have an attorney representation. So what does that mean? That means you have an opportunity to bring that person that you are working with that's going through a divorce and introduce them to an attorney. In turn, that attorney will think of you to introduce their clients to you. You bring them business, one back scratches the other, right? And this could result in multiple transactions. So let's think about this. You help them sell their current home. What if you have a great and amicable relationship with both of them, and you help each one of them buy their next home, the right sized home for where they're at now? And then when they each remarry, you can help them sell their current home and then buy their next home with their new sweetheart. Why not have 7 transactions out of one divorcing couple? So I thought that was pretty cool. So we've got to make sure that you know that this is an emotionally charged time. So you've got to get really good at conflict resolution. So if you're looking for a new book to kick off the new year, I would definitely encourage you to read a book on conflict resolution. It is the most difficult situation when you're charged emotionally like this to make a solid financial decision. So you're going to have to be the person, the word of wisdom to really help them make that great financial decision. Sometimes they want to be right and keep the house for the wrong reason. So it's going to be a lot of conversations going through, letting them know that sometimes keeping the house is not the right thing to do. We've got some additional information there in a few slides. But I've noticed with the divorce couples that I've worked with over the last few years that a lot of times somebody wants to stay in the house just because they don't want to up and move those kids. But let me share something with you. When you're sitting at the dining room table and, mom or dad is not sitting there as well, the kids notice. When they walk into your bedroom and half of the closet is empty, they notice. So sometimes just having a fresh, clean start is the way to go, as opposed to trying to keep everything the same, because it's not the same. So make sure you share that with your clients when they are thinking, maybe I want to stay because I want to make it easy on the kids. And unfortunately, because people are making emotional decisions, it can be very, very costly. So they often don't make the right decisions because they want to harm or hurt that other person, or they want to keep their kids in a comfortable setting, but it's not always the right way to be. So let's move on now to some of the obstacles and sales sabotage that you might experience. A lot of times you'll see that the other party doesn't want to sell. So if the client has come to you and said, listen, we're going through a divorce, we need to sell the house, this is what needs to happen. A lot of times the other party, the one that didn't initiate the divorce, doesn't want to sell. And that's going to stand in your way of being able to represent this listing and get it sold quickly for the highest dollar with the least amount of obstacles, because unfortunately, your client, the seller, is the obstacle. So you might find that they are not open to the home having an open house. They may reject requests for showing the property. They may not accept a really strong offer. They might drag their feet for a couple of days when it comes to counter offering or accepting an offer. So just try to build that in. You're gonna have to be very, very, very positive and very proactive. But I think the key here is, if you are working with that kind of a situation, somebody's making an offer or counter offer, something along those lines, communicate that with the other agent that, hey, we've got somebody who's going to need a little bit of an additional time. I would encourage you, though, to stay away, just based on what I've seen and statistically speaking, stay away from letting it be known it's a divorce sale. It doesn't help anybody when the buyers have the kind of the leg up knowing that this is a divorce sale. Sometimes they know that they almost have to sell, right? And I wouldn't put seller motivated. I've seen stats from National Association of Realtors that showed that listings that listed as seller motivated actually sold for less than those that didn't mention that. I would also try to, for pictures' sake, try to avoid showing one empty closet and one full closet so that people don't come to their own conclusions. You don't want it to look like a sale that is in a desperate situation. But you do want to let the other party know that you're working with that, hey, we might require a little extra time. So however you want to present that, do so, but I would try to avoid the divorce conversation with the other agent. You're going to find there's a lack of communication. So sometimes, especially when there's attorneys involved, you can lean on the attorneys to force communication to happen. Listen, Mr. Seller, I realize you don't want to sell this home, but it's court ordered. The judge said so, and everybody's agreed to it. And we do need to have a timely response from you. And so please don't make us go in front of the judge and require everything to have a 24-hour turn time. Can we just have a 24-hour turn time? And sometimes when one attorney has to talk to another attorney, they're at high billable hours. So it's costing that person extra money when they're just trying to be, obstinate to hurt that other person. So sometimes saying that in a kind way and explaining it up front will help with that lack of communication. But I want to share with you to expect it. It's not fun. It's something you're going to have to just work through, though. So a lot of times one person is very communicative and the other isn't. I've had agents that will call, text, email, and then ask for some kind of acknowledgement on at least one of the communications. Please just let me know that you've received this text. Return my phone call. Please respond to this email. Every once in a while, you'll have some communication from that other side. A lot of times there's just ridiculous demands. They want it to be listed $100,000 higher than what fair market price is. There's no showings except for on Saturdays between 1 and 3. Just really ridiculous things, especially if you've got an attorney there, they'll help you through that with being able to post some demands for that person who's got some ridiculous requirements. If it's especially hard when you don't have an attorney involved that can bring the hammer down. So from the very beginning, we've got to just ask everybody to play nice in the sandbox, because if this is going to happen, we need everybody's participation. But be ready for some ridiculous demands. And this is where conflict resolution training and studies will really come into play. I just covered the listing price too high, so it won't allow the home to sell. Sometimes I've seen where people won't keep up with maintenance on the home. They'll let the lawn go, they'll let the pool go. They just kind of let everything in their life go because they're heartbroken, they're sad, they're feeling depressed. So make sure as part of the listing agreement and maybe that initial conversation, some requirements are laid out like, hey, we have to have that lawn mowed up until closing day. The pool has to be maintained up until closing day. It's our responsibility, and it could cost you a lot more in the sale price coming in lower because somebody looks at the house like, oh, look, it's not really being maintained. And visually speaking, they thought, well, if they can't mow the lawn, what else aren't they doing inside the home? And if the pool gets into a place of disarray or the lawn, and those buyers have to come in and hire a professional to have to do it, they might be trying to push that cost onto the seller. So let them know that there might be some additional costs involved, and we want to try to avoid that. And again, just making outrageous terms and not being reasonable with those offers. So we want to make sure that you understand what you might be looking at. So when you are in partnership with that family law attorney, you can help them set up some parameters of who the property needs to be listed with, right? You're going to list with me, and these are the reasons why. I know extra information in serving families that are going through a divorce. We've got to make sure that the list price and maybe even the purchase price has to be agreed upon within, say, some range. Maybe agree on 10% of that range or 5% of that range of what your CMA shows. Make sure that the attorney backs you on saying the house needs to be maintained and has to be up until closing day. And some implications if that other person isn't being communicative with you during the process, what is the consequence? I think it'd be really important for that to be laid out from the very beginning so that they realize that there is a consequence and a cost involved if they don't play nice in the sandbox. Okay, so in the state of Florida, there are 3 types of divorce proceedings. There's litigation, and this is where all cases start and end with the judge. This is the most common. Even if you're not represented by an attorney, you still have to submit your information for the divorce, and the paperwork goes in front of a judge. The divorce is not finalized until the judge or the judge's assistant signs off on it. And in the state of Florida, it typically takes a couple of months to go through. And if it's contested, it could take, I've seen, unfortunately, a couple of years. Mediation. Mediation is an alternative dispute resolution. And this is if everybody is on amicable terms, like, hey, you know what? We just fell out of love. We don't have a whole lot that we need to split up, and we're not fighting over anything. We've kind of agreed about all of it. They could sit down with a mediator instead of attorneys, put it in writing, and submit it to the courts. And then collaborative law. Collaborative law has really come out as kind of a shining star in the last few years. And this is where everybody plays nice in the sandbox and agrees. They literally sit around a table with each of their attorney representations, a financial person there. Sometimes there's a third party that is kind of acting as a mediator and making sure that everybody plays nice. This is a way to avoid excessive litigation. And this is a way to avoid litigation, not having to go, fight each other in front of a judge with each attorney representation. It's really just sitting down collaboratively and making sure that everything gets split as agreed. And it's kind of a handshake and a completed document at the end. It gets submitted to the judge signs off of it. So collaborative is where everybody can speak humanely to each other, even if there's some complicated things to work through, such as real estate, businesses, assets. They've got the representation of all of those people around the table, and working through it for hours at a time is how that goes. So this is quite interesting. Impact on families and children. So this one's a heartbreaker. 75% of women apply for government assistance or benefits after a divorce. And many children end up with lower grades and scores, and they don't perform well academically. They experience anger, anxiety, and distress because of a divorce. Divorce increases the risk of mental health problems and increases behavioral problems in children and even adults. And at greatest risk due to the lowest level of financial literacy, elderly, women, minorities, low income wage earners, they wind up getting the brunt of the problems here. So wanted to share with you what to look out for as some of the unfortunate impact on families and children after the fact. So what about emotional implications for the rest of the people. So many people make poor financial decisions out of hurt and pain. I don't want that jerk to have the house. I'm going to keep it. Even if I can't afford it, I'm going to find a way to make sure he doesn't get the house. It's probably going to bite you in the butt in the future months or years. Not always the best way to go. Keeping the house will somehow make the situation feel better, like you've won or something. That's not always the best way to attack it either. But because it's so emotionally charged, that tends to be in the spotlight as opposed to sound financial advice going through this. Sometimes people want to hold on to the house because of memories, less disturbance for the kids, as we've discussed, or I'll show you, or you can't have it, it's mine. And unfortunately, that can cause a really big problem financially down the road for some people. So let's talk about some of those financial implications. Basic living expenses are no longer shared. So let's say we've got a couple that are now divorcing, and she mowed the lawn and he cleaned the pool. Well, if that's not going to happen anymore, and the house spouse, there's the out spouse, the one that leaves, and the house spouse, that house spouse is going to have to take on all of those chores and responsibilities. Well, if now you find yourself as a single parent and the one responsible for the entire household as far as maintaining the house, now maybe you have to hire somebody to mow the lawn, you have to hire somebody to clean the pool, and those things all add up. Now you've got reduced income in the house because you don't have these shared expenses. You didn't think about how the fact, like, well, you had two incomes coming in most cases. So cable was easy to pay for, Wi-Fi was easy to pay for, the lawn guys or the cleaning ladies were really easy to pay for. But now that they're not shared, it can pile up really fast. And then you've got costs such as attorney's fees and court fees. And most people, unfortunately, don't have money sitting in the bank. And so if you don't have money in the bank, it's going on the credit cards. Well, guess what's happening? If you plan on refinancing or buying your next home and you're putting all of these costs on a credit card, guess what happens to your credit card balances? They get high or even maxed out, and it impacts negatively, unfortunately, your credit score. Now, if your credit score gets too low, your interest rate is higher, or you may not even qualify with a minimum credit score. I've seen sometimes where people have too much in debt and we don't have enough equity to pay off those credit card bills to try to get that credit score higher, to get the interest rate lower. It just kind of puts you in a pickle. And adjusting to the new cost of living can be quite difficult. Again, you're the sole responsible party of all of the utilities, all of the maintenance of the home. Sometimes, especially when you get a refinance, you're taking somebody off of that insurance policy. A lot of times, the insurance companies are requiring a brand new insurance policy. Well, what if they look at the house and they're like, hey, when we did this, policy 4 years ago and just let it roll over year after year, your roof was newer. Now it's old. Or we need, 4 points in wind mitigation in order to even get a quote to you. Or, yeah, we'll insure this house, but it's going to cost you $1,000 more a year. I've seen that happen too, and that's a difficult place to be. So now let's move on to the timeline before, during, and after the sale. And I'm providing all of this for you so you just understand the implications of what you're going to be working with and through when you're serving these people. So before the divorce, about 45 days of due diligence before the divorce proceedings really start. So you're gathering information, you're doing a financial affidavit, you're pulling in all of that information in order to create that marital agreement creation for that dissolution of marriage. So what does that mean? Financial affidavits, bank statements, pay stubs, evidence of income. A lot of times you'll be gathering up all of the shared assets and information on it. So you're pulling in, your client's pulling in the mortgage statement, credit card bills. So we've got to know what our liabilities are and our assets to figure out who's going to be paying for what, to see who's going to be getting what. And this goes all the way down to your retirement account. You've got a beneficiary essentially listed there. Life insurance. There's so many different aspects that we've got to sort through. So that's why it takes about 45 days worth of due diligence. That's longer than a process of buying a home, isn't it? So now we're in the process. This is the during portion. This is where you're going to be marketing, obviously, for the highest price, least amount of obstacles. So we want to attract a really strong and committed buyer. We've got to be aware of timelines with the judge and with the divorce. So if it's a high conflict situation, if somebody's dragging their feet, somebody's not accepting a really solid, strong offer, get the attorneys involved. And again, start kind of threatening, unfortunately, and threatening those consequences of what could happen. And this is really where we want to have all of our title work already there. We want to make sure that, oh, our sellers didn't forget about that solar that they added to the house and there's a lien. Oops, I forgot I had down payment assistance, or I got this home equity line of credit, those kinds of things. So from the very start, when you create your listing, you're going to want to ask for a title search to be done right away and not necessarily wait until it goes into contract. Because a lot of times there's liens against the home that the seller just plain out forgot or didn't actually understand that it was a lien against the house, such as a water treatment. I've seen water treatment systems that are $3,500 to $10,000, if not more, and sometimes they're attached to the home on title. So it would have to be paid out of proceeds. It's not a debt that somebody can kick the can forward and take with them even after the sale. I recommend having a home inspection even before you list the property. Why? Well, if there's going to be any major components that are going to be a problem, you want this to be in an agreement between the divorcing couple prior to them looking at a seller's net sheet and those kinds of things. They see that number on that seller's net sheet as an anticipated amount of equity to split. And then the next thing you know, they find out that they've got a $15,000 drain field issue that they've got to contend with. If they're going to be able to sell this property, they're not going to be very happy. So they're going to say, well, why would I get a home inspection in advance? Couple of reasons. It can eliminate any major issues from being a problem later and a big costly conversation in a contentious situation. That way, if there are some things that need to be addressed, it can be addressed now while it's on the market, waiting for the right buyer. Also, it's an opportunity to expedite it. When it does go into contract, you could say, hey, buyers, here's a home inspection, and these are the things that we've remedied, or it came out pretty clean. You're welcome to have it. You're welcome to get your own home inspection, but wanted to let you know we did this in advance just to make sure that there wasn't any major things to handle. It also probably doesn't hurt to have an appraisal. Why? Because a lot of times the person who's not happy about the divorce and that's going to be your problem child is going to believe that you're giving the home away and listing it at a crazy, stupid price, or I want to list it at $650 and you've done all of the work and this shouldn't be listed a dime over $550. Being able to provide a third-party professional opinion of that value and say, listen, our buyer, which 2/3 of the time is going to involve financing, they're going to have an appraisal. And even if you got somebody with a wild hair that would offer you $650,000 for this home, if it doesn't appraise, we may not be making it to the closing table. So let's avoid all of those problems, have an appraisal at the beginning, and then list it within that range of that appraisal. And what if it can't sell for what you're asking? Maybe they need to do a refinance and one of them stays. We're going to talk about comparing refinance to sale in just a few moments, but you might be sitting down across somebody's dining room table and they might say, you know what? He really, really, really wants to stay in the house. I don't care if it's sold or not, but I just want half of my equity. So help us figure it out. Sometimes it may not be a listing presentation. It might just be helping them make the right decision for themselves. And if the right decision is a refinance and you don't get that listing, ask them to refer you to somebody to make up for your time and your professional advice that you've given to them. But do be prepared for each. And then after, help them with their next home. It might be that they're going into a rental and not buying a home, but they'll likely be in a new relationship and maybe even a new marriage within 3 years. And you can get repaid at that point, right? Introduce them to your partners, your CPA partners, financial advisors, life insurance, estate planning attorneys, anybody else that you are in partnership with for referrals. Introduce them to them, because all of this stuff needs to be done new, right? They might need to find a new financial advisor and CPA because they're not going to work with that jerk works with, Now they might need their own new life insurance policies because heaven forbid something happened to them. Who's going to take care of those kiddos? They want that money to be, taken care of. And then check in on them. A lot of times it takes weeks, months, or sometimes even years for people to really process what they're going through with something as emotionally charged as a divorce. Check in on them. They might have new relationships, new friendships, new career, new things going on. They might be blossoming on the other side of this divorce because now they can actually step into their greatness. And if that's the case, you want to be remembered as that person that helped them through something so traumatic. And now you can create this relationship with the new version of them, really excelling and propelling in life. And you can help them get situated in their new space, new home. So when you're going through a divorce, your credit is really at risk. So I want to just share a couple of things here on ways to protect your credit. So a lot of times, couples will have joint accounts, right? Joint bank accounts, joint credit cards, or if not a joint credit card, sometimes the other person is an authorized user on their credit card. This is where it's doubly scary. So let's say I have a credit card and I put my husband as an authorized user on it to help build his credit. And so he can just use that credit card without us having to go into additional debt with a second credit card. That way it's one bill. We can work through all of our finances that way. But let's say now I divorced the jerk, okay? And I forgot that I put him as an authorized user. He still has that credit card and he's not financially responsible for it. He's not a co-owner of that account. It's not his debt. He's just authorized to use it. So that's where it can get really scary if we forget to do that. I always recommend to freeze your credit. Think about it this way. If that other person wants to harm you, they can. There's a really good likelihood they know your social security number. It's on your joint tax returns that you file together. It's on all of your applications that you've done together. So freeze your credit so nobody can have access to go and start credit in your name. You want to remove any co-borrower relationships where possible. On loans, if you are a co-borrower on a loan with them, the only way to end it is to get a new loan to replace it. So there's no way to remove somebody off of a mortgage unless you do a refinance. There's no way to remove somebody off of a car payment unless you refinance that car payment. And bank accounts. This is a terrible, terrible story, and I've got to share it. My husband had worked at a bank for a number of years. One of his regular clients came in and said, "Hey man, I've got to close out this savings account." Okay, no problem. He closes it out and he was asked to move his money in that savings account over to his checking account. Cool. He did it. Great. Have a great day. A couple of hours later, the wife walks in. You know where I'm going with this, don't you? She was on that joint savings account, but banks only require one person to close it out. Now, the anomaly to that is business bank accounts. A lot of times there's two signers required on business bank accounts, but on most personal bank accounts, it only requires one party to close it out. So she came in to access some of the funds, and my husband had to say, "I'm so sorry, this isn't an open account." She's like, "What are you talking about? I have a ton of money in that." He says, "I'm so sorry, it's not an active account. It got closed a few hours ago." What a really, really hard place to be. Now, if they have attorney representation, the attorney could go to the judge and say, "He's not playing nice in the sandbox. This was a joint account. He didn't have access to all of those funds," and, do what they do to negotiate on behalf of their clients. But I do want to share with you, in the midst of that moment, it's a very, very difficult place to be. Okay. When it comes to a home during a divorce, there are two options: refinance or sell. Now, did you know that 62% of people going through a divorce own real estate. So that's a big chunk of people that need to work through what to do. So that's what we're going to do right now. One option is to refinance and keep the house. So it already referenced a house spouse, the person who refinances and keeps the house, and the out spouse, the person who's getting taken off of title. They're being removed from the mortgage because the refinance will replace that mortgage, and they're moving on to some other place. It sounds like a simpler plan, but it's not. A lot of times, the person that wants to stay, that house spouse, doesn't qualify. And it's usually because of income and debt to income ratio, especially where rates are right now. So let's back it up 4 years ago. In 2021, interest rates were 3%, maybe a smidge higher. And if it took both of them to qualify for the loan, which in most cases it often does, and interest rates were 3.25, right now they're high sixes to low sevens. I mean, when you're double the interest rate and half the income, a lot of times you don't qualify. And then there's got to be an equity split. So let's say the house is worth 500,000 and they owe 300,000. The house spouse will get 100,000 of that equity if they're splitting it 50-50, and the out spouse will get 100,000. Well, what about closing costs? Yeah, you got to remove that, split that again if it's 50-50 or however they're going to. So now the house spouse has to finance in that equity portion. So now you've got this $300,000 loan you're paying off plus a closing cost, but now you've got to add that $100,000 to pay off the person who's leaving. It's a lot of times that person at that point can no longer qualify. And what if there's deferred maintenance on the home? What if it's an old roof or the AC unit's 15 years old and it's barely spitting and kicking? What if the electrical system is really old and insurance is giving you a hard time and saying, listen, you really need to upgrade this to current code or we're not going to be able to have insurance for you? If that's the case, a lot of times with that refinance, you've got to use some of those proceeds out of that equity to upgrade those things. So that should be split as well. It shouldn't necessarily just fall on one person. And again, I told you new homeowners insurance policies are often needed, and insurance is a lot more expensive now to start than maybe where it had started a couple of years ago when they bought the house and the policy just continued to renew and roll over. So sometimes they have to have a 4-point inspection, and if it doesn't come out great, now the house spouse has to fix those things in order to qualify for insurance purposes. So if you go this way, and somebody's going to refinance, sometimes that person that's refinancing might just take their sweet old time. And if that's the case, like, what repercussions are you going to have in order to make sure that that person does it in time? So this is something you want to talk to a family law attorney, and knowing this, because attorneys don't necessarily know real estate, they don't necessarily know the process. You could sit down with a family law attorney and say, listen, I'm going to help you put in some of the terms to best protect our shared client. And so if our shared client is the one that's going to be the out spouse, right, and the other party wants to keep the house, how long do they have to refinance? And what happens if they don't qualify for the refinance? This is where we got to put it in writing as part of the divorce decree up front. You have 6 months to complete it. If you don't complete it within 6 months, it needs to be listed within 7 days. It's going to be listed with this professional, and it's going to come within 5% of an appraised value. And any offer within 5% of the appraised value has to be accepted. You're going to have a 24-hour turn time for communication. You're going to have a 24 or 48-hour turn time on any offers or counter offers. This is where you can say, we're going to work as a team and put this in writing. And if they don't do that, it goes back in front of the judge, of course, at a cost, and there's some repercussions. So the cleaner way to go is to sell, and that benefits all of us in real estate. Then you can split the equity. However the split goes, it might be 50-50, might not be, but it's a clean break from the home, from their memories there, and from each other. It can help them to reposition their finances, their home, their location, all of those things. So a lot of times when it's no longer a 4 or 5 member household, maybe one of the kids has grown up and graduated and moved out of the house, and now you don't have the spouse there. Maybe you don't need a 4 or 5 bedroom house. Shoot, maybe you don't even need a 3 bedroom house. So you don't need to air condition all that square footage. Maybe now the next house is a smaller sized home or a townhome or something that just fits their lifestyle a little bit better. It's a right sized home for where they're at with their kids count, the cost of housing, for their age. Maybe they're a little bit older and they say, you know what, I'm just going to go ahead and get my retirement home now, get it out of the way, and just go ahead and have my little condo on the beach. And, sometimes it can just be a fresh new start for kids. If they had a very contentious relationship, having a new space could really be filled with love and peace instead of memories of all those fights. Again, it's a cleaner way to go. So when it comes to financing, this is something that most family law attorneys don't know. And realtors don't know, but mortgage loan officers really should. But here's something that's really important. Alimony and child support has to be received depending on what kind of loan for 3 to 6 months. So if they're going with an FHA loan, they have to receive it for at least 3 months. A conventional loan, they have to receive it for at least 6 months. And we have to be able to prove that it's going to continue for at least the next 3 years. 3 years from what? 3 years from the date of closing for either that loan for a refinance or the loan for a purchase. So a lot of times I'll have a conversation, and this is where you can look like the expert with the family law attorney, and you can say, listen, our client is looking at receiving alimony or child support or even a payout, maybe from their retirement account or something like that, since they're no longer going to be a beneficiary. Let's look at paying it out over 40 months. And let's get it started now, even though it's not court appointed to do it, as long as we can show a paper trail. Maybe it's through collaborative law or mediation and everybody's playing nice in the sandbox. You can look at this versus a big one-time payout. So let me give you an example of somebody I helped make a homeowner because of knowing this. She was going to get somewhere around $85,000 to $100,000 from her future ex-husband. And I had shared with the attorney this that I'm talking about right now. I said, if she can start receiving it as a payout, call it alimony, instead of a one lump sum, and we can have it showing that we're going to have it. So go ahead and just set it up now for 40 months. So she got her 3 months worth before closing of receipt of it. And now we have 37 months left prior to closing that it's going to be received. So we just took that lump sum, divided it over 40 months, and now we could use that as qualifying income for her purchase. So it was a big, big difference for her being able to be approved or not. So consider that when you're in conversations with family law attorneys, or you can say, I know an expert in this, and together we can formulate the right thing for our client. Just so you know, lenders are not allowed by law. We are not allowed to ask the client if they receive alimony or child support. If they offer that information voluntarily, we can use it. So if they present it, we can, but I'm not allowed to ask them. So if you're working with somebody that tells you, hey, I'm going to be receiving alimony and child support, say, let's talk immediately with the lender, lead with that. And that way your lender will be able to guide you on what we need to do in order to be able to use it. Because again, we've got to have receipt of it. It's got to show continuance, and there's got to be a documentation process for it. And if you're paying child support or alimony, this has to be calculated into the debt ratio. So it's really important from the beginning that we start calculating those things in when we're looking at those initial steps for financing. Now, if they are still legally married, when it comes time to buy the next home, let's say you're representing Judy, and Judy is getting ready to buy her next home. You've helped her sell the home. That's done. Or it's a simultaneous closing and Judy's going to be closing on Friday. If Judy is still married to Judy's spouse, that spouse has to sign some paperwork at closing. They have to sign acknowledging the mortgage. They're not going to be listed on title, but it's going to say Judy, her last name, a married woman. And it's going to require that spouse's signature acknowledging putting a debt against Judy's primary home. They're also going to have to sign the closing disclosure and some other documents. They're not going to be on the promissory note to pay, but make sure that we warn Judy in advance that this has got to happen. If that divorce decree is signed on Thursday, we close on Friday, that's all we need. And then the former spouse no longer has to sign. Now, this is really where I want to spend a few moments and let's talk about partnerships and team. This is really, really important to be able to create a team around you. If you're getting ready to list a home that is going through a divorce sale, you want to have that title work up front. Don't wait until it goes into contract to pull that to find out, oh my gosh, there's a $30,000 solar lien that nobody told me about. Or they said that they didn't have a home equity line, but look, there is a home equity line. So you really want to see if there's any blemishes that we need to work through prior to it going into contract. You want to work with a lender partner that actually knows this information, that can help teach it to you so you can just continue to build up your wisdom in this. But also it takes somebody who's well versed in it to make sure that all of those obstacles are removed along the side here. And then attorneys, family law attorneys, probate attorneys, estate planning attorneys, real estate attorneys, bankruptcy. Let all of them know that you've got this additional education in helping families that are going through a divorce, because attorneys know attorneys. And sometimes somebody's sitting down to talk to a bankruptcy attorney, and a month later, that person calls that bankruptcy attorney and says, you know what, these financial issues have led us to divorce. So we no longer want to keep our house out of the bankruptcy. Now we just want to be able to sell it, separate, and go our different ways. Do you have a really great realtor that you can introduce me to? Insurance. It's really important to make sure that we work with somebody who's excellent and can work with what we've got to work with, which is removing somebody off of that policy, getting them a new great policy. CPAs are going to be a really important aspect. Not only that, are you going to be able to refer to them, they're going to be able to refer to you, because a lot of times when you've got a divorcing couple, that one doesn't want to work with the same professionals as they had worked with as a couple, or that the other person is going to be working with. But CPAs, all of these partners, if they know that somebody's divorcing, they want to make sure that they refer to somebody who knows what the heck they're doing. Financial advisors are going to be a great resource for you as well. A lot of times when the divorce process happens or starts, once it commences, financial advisors are brought in because there's got to be a split of assets. Sometimes the former spouse has access or ownership of somebody else's retirement account. So financial advisors absolutely know. They're in the know when people are going through a divorce. You want to have a home inspector that you can count on, that's going to work diligently and with empathy through this situation, that's going to present the information that doesn't add extra chaos or stress in the conversation, that can gently present what needs to be done here with the home, especially if you're getting that inspection done prior to listing. We don't want any additional reason for, more contentious conversations, right? And have an appraiser in your back pocket ready to go. So that way you can get that appraisal up front if needed, to be able to get both parties on track with you when it comes to the list price and an acceptable sales price. So just a quick visual on the paperwork during and after a divorce that needs to be pulled in and addressed. So retirement accounts, a lot of times that is split somehow. So we've got to look at retirement accounts. When you created a will as a married couple, your beneficiary is usually your married, your spouse. So there's a living and a final will. And so you're going to want to remind them to get that updated. This is where you can introduce them to a really great estate planning attorney to help keep their stuff out of probate and also update that will. You don't necessarily have to go back to the company who created that will. Unfortunately, most people are walking around without wills, so help them have one created, and they could put their kids, their parents, other family members as the beneficiary as opposed to their former spouse. And this is a great time for estate planning documents to be created or revised, after this divorce. Life insurance needs to change for those beneficiaries, and in some cases they don't. Let's say, somebody's got a $500,000 life insurance policy. Sometimes you want to leave that beneficiary as your former spouse because they are co-parenting with you, and you want them to be able to, still provide for those kids. So in a lot of cases, the life insurance beneficiary stays, but there should be some parameters around that. So that's a great conversation to have with the life insurance agent. We got to make sure that only one party, if you do a refinance, is listed on that insurance. That insurance has to be updated. If heaven forbid a claim is made because something terrible happened, you don't want to have to go tracking down somebody who's no longer on ownership of this home, no longer on title, and probably no longer in conversation, at least not uh, intentionally, and have them have to sign an insurance check, right? The medical directive. Could you imagine if you had a terrible divorce and now you got hit by a bus and your surrogate, your health surrogate, your medical directive is for your former spouse? They'd be like, "Oh my God, pull the plug." What do vets do for dogs that are dying? No, you want to make sure the medical directive is updated and a health surrogate is updated. And then what about power of attorney? A lot of times with the will and the trust and everything that the estate planning attorney does, there's a power of attorney. You do not want, especially if you ended things in a bad, not on such great terms, you do not want that power of attorney to be listed as your former spouse. All right, well, that's what I've got, my friends. And I wanted to say thank you for listening this so far. I've got just a few minutes that I want to share with you. Um, Bank accounts is not on that list and it should be. So bank accounts, if you got that other person listed, they need to be removed. So a lot of times that means closing that account and starting a new one. And keep in mind credit, if there's the authorized credit cards, if somebody's an authorized user on your credit cards or joint credit cards, um, you want to remove them off immediately. The last thing I wanted to say is when it comes to divorce, you'll hear that it's 50% of marriages end in divorce. That's actually not true. It is close to 50% on first marriages, but catch this. Second marriages are a little bit higher at 60%, and third marriages are at 73% end up in divorce. I didn't start going further than that. I know somebody, I was just talking to them last week, they've been married 5 times. It is what it is, but it's probably statistically a higher divorce rate at that point. The average age of divorce is 30 years. It's usually 3 years before remarriage to their next place, next sweetheart. So this is a really great time for you to continue a relationship with them so you can help them. So I just want to spend the last couple minutes giving you some words to bring you confidence so you can approach family law attorneys. So when you are out marketing, and I will tell you, if you're out networking and marketing, a lot of times attorneys don't go to networking events. They're usually trying to just be in their craft, right? And run their business and help their clients. So what if you were to cold call a family law attorney? Or what if you were to ask your sphere of influence, who would you recommend is an excellent family law attorney? And when they make that recommendation, say, would you do me the utmost, the biggest favor in the world? And would you make an introduction to that family law attorney? So now you've got this little triangle of trust created. This person has introduced you to somebody that they know, like, and trust. And now you can reach out to that family law attorney and say, unfortunately, I have opportunities where I work with people who are going through a divorce. And unfortunately, a lot of them don't have representation. I'd love to start a conversation and hopefully a relationship with you where we can build it on mutual trust and respect, where we can refer business to one another. So when somebody comes to you and they have real estate that needs to be handled, which is 62% of divorcing couples, I'd love it if you would think of me. And when I've got somebody that isn't represented by an attorney, which is 50% of divorces, I'd love to refer them to you. So let's sit down, get to know each other, our businesses, those kinds of things. Well, what if you were to say, you know what? I've got some extra education and information, and I've got a team built out. to help remove the obstacles, make it a smooth transaction. And I know how to have conversations and work with empathy in this high conflict situation. I'd love the opportunity to prove myself on being able to work with your next client that needs to sell their home. So sit down, have that coffee date with them, get to know one another. And as soon as you say just a couple of things that you've learned here this evening in this time together that you know that could stand out to them. I know that there's some requirements for receiving child support and alimony that needs to be met in order to use that as qualifying income on a mortgage. I know that sometimes people want to have a refinance, but in many cases, it's unaffordable. I've got your team put together that can find out immediately if your client can qualify for the carrying cost of that home. And as soon as we figure out if they don't qualify, now we can dive right into the parameters of selling the home for top dollar in the quickest amount of time. And I've got some parameters around how you and I can work together to be in conversation to help keep this from getting stale in the sale, keep somebody from keeping, the obstacles, putting any obstacles up front or not playing nice in the sandbox. I've got some education and some skill sets around this to help moving it along so that we can create a really great experience for our clients together. So if you, after all of this information, are interested in knowing more, there's designations for this, or if you just want to set up a few minutes of extra time about how we can help maybe put together what your marketing campaign might look like. Some carefully crafted messages on social media. I'll tell you, January and August are the top 2 months for divorce filings. And so you want to start having those conversations online in a very caring, kind way. Maybe you can just share some of those statistics that you've learned and just say, who do you know that might be going through a divorce that needs a professional that cares and is qualified to help them with their largest financial asset that likely has to be split. Coming from that approach, you will have instant trust and better opportunity than anybody else because it's almost like you're in their mind. Like, how did you know I need to talk to you about what's possible with selling my home because we're getting a divorce? So if you would like any additional conversation, I'd love to connect with you. So I know it is 7. I want to make sure that I honor your time. I've asked you for an hour of attention, and I appreciate that you've given that to me. But I'll stick around for any kinds of questions. Otherwise, I hope that you have a really wonderful evening. I'm so thankful that you shared an hour of it with me. Thank you for being here.